Welcome to Inside Hawk. Today we are going to learn one of the most important principles in accounting, the dealer rule. What is dealer? Dealer is an acronym that helps us remember how accounts are classified. D stands for dividends, E for expenses, A for assets, L for liabilities, E for equity, and R for revenue. Dividends, expenses, and assets are all debit accounts. That means when we record a debit entry, these accounts increase. On the other side, liabilities, equity, and revenue are credit accounts. A credit entry increases these accounts. Here is the rule to remember. A debit increases dividends, expenses, and assets but decreases liabilities, equity, and revenue. A credit does the opposite. It increases liability, equity, and revenue, but decreases dividends, expenses, and assets. And that's dealer. It's the foundation of double entry accounting. When you master this, you unlock the language of business. Stay sharp with Inside Hawk.